Most traders don't lose because they lack intelligence. They lose because their intelligence turns into a weapon pointed directly at their own consistency. That's the ugly truth nobody wants to say out loud. Trading attracts sharp people, pattern recognizers, problem solvers, people who like control, people who feel safe when everything is explained and predictable. And that exact personality trait is what gets them trapped in the most expensive illusion in the markets. The belief that if they just become more advanced, they'll finally become more profitable. The market doesn't reward how advanced your strategy sounds. It rewards how well you execute. It rewards how consistently you show up, how calmly you think, how accurately you repeat a small edge over and over without flinching. The market doesn't care that your chart looks like a NASA control panel. It doesn't care that you can explain supply and demand zones, institutional order flow, Fibonacci confluence, imbalance, mitigation blocks, divergence, volume profile, sessions, correlations, market structure shifts, and 16 different types of entries. The market only cares about what you do when price moves against you, when it chops for hours, when the trade doesn't immediately validate your ego, when your perfect setup loses twice in a row, and when your mind starts begging you to interfere. That's why the more advanced your strategy becomes, the worse you'll trade. Not because complexity can't work, not because advanced tools are inherently bad, but because complexity gives your emotions more buttons to press. Complexity gives you more ways to hesitate, more ways to rationalize, more ways to bend the rules, more ways to violate the only thing that ever mattered, disciplined repetition. Complexity doesn't make you safer. It makes you more fragile because now, every time you enter a trade, you're not entering a setup. You're entering a courtroom. You're entering a debate. You're entering an argument with yourself where your fear gets to cross-examine every decision until you doubt everything. And if that sounds familiar, like this is describing your last month of trading with uncomfortable accuracy, go ahead and like the video right now, because this is exactly the kind of truth that can save you years. You don't need motivation. You need a system that forces you to stop betraying yourself. The reason you've been upgrading your strategy isn't because you're progressing. It's because you're running from the real problem. It's because deep down, you don't trust yourself to execute something simple. So your mind keeps adding complexity as a form of protection. It feels safer to believe you're losing because your strategy isn't advanced enough than to face the possibility that your discipline isn't strong enough. Complexity lets you avoid accountability. It lets you keep hope alive. It lets you say, I just need one more filter. It lets you say, it's almost there. It lets you say, this version is better. It lets you pretend the problem lives outside of you. But the moment trading becomes hard, the truth comes out. The truth is that the real advantage isn't the setup. It's the trader. It's the person behind the chart. It's the ability to follow rules even when the rules feel boring. Even when the rules feel too simple. Even when your ego screams, this can't be it. Even when your mind whispers, real traders do more than this. That's why the best traders I've ever studied always sound the same when they talk. Not because they're copying each other, but because the markets force the same conclusion on anyone who survives long enough. The conclusion is always that simplicity scales, complexity collapses, simplicity creates repeatability, complexity creates exceptions, simplicity makes you consistent, complexity makes you emotional. It's almost funny when you think about it because the average trader's path looks like this. They start with one simple idea. They see a few wins, they get excited, then they hit a losing streak. And instead of accepting that losses are part of the game, they start improving the strategy. They add an indicator, they add a confirmation, they add a time filter, they add a rule about not trading on Tuesdays if CPI is coming out on Thursday and the dollar index is inside a weekly range. They start stacking logic like a Jenga tower and they call it sophistication. And at first it feels better. It feels like control. It feels like safety. Because now you're not just trading. You're engineering. You're building. You're designing something smart. But what you're really doing is building a mental cage that you'll eventually trap yourself inside. Because now the strategy isn't clear. Now the rules aren't sharp. Now every trade is questionable. Now every entry is conditional. Now every stop-loss move is a negotiation. Now every exit is a debate. Then one day you sit down and you realize something terrifying. You don't even know what you do anymore. You don't know the exact entry criteria. You don't know if you're trading your system or your emotions wearing your system as a disguise. You don't know if you're consistent or just trying things. You don't know if you're improving or just busy. You don't know if you've been disciplined or if you've just been active. And that's when you start feeling like the market is random. That's when you start saying things like, nothing works. That's when you start believing the problem is external. And the worst part is, you'll still call it learning. You'll still call it experience. You'll still call it becoming advanced. You'll start thinking, maybe this is what trading is. Maybe I just have to keep evolving. But what you're really doing is turning trading into an endless maze where there's no finish line because the strategy is never done. The strategy is never complete. The strategy is always being edited, and a system that's always being edited can never be mastered. That's why the best traders don't chase complexity. They chase mastery. They pick something simple and they squeeze it until it becomes deadly. They repeat one pattern until it's part of their nervous system. They know what it looks like. They know what it feels like. They know what it does in different market conditions. They've seen it win. They've seen it fail. They've seen it fake out. They've seen it run for days. They've watched it in real time. They've watched it in replay. They've logged it. They've audited it. They've accepted its nature. And because of that, their confidence isn't emotional. It's earned. It's built on repetition. It's built on data. It's built on familiarity. That kind of confidence doesn't panic after two losses. It doesn't go searching for a new method after one bad week. It doesn't treat every drawdown like an identity crisis. It stays calm. It stays steady. It stays patient. When someone tells you trading is 90% psychology, most traders nod their head like they understand. But they don't actually feel what that sentence means. They hear it like a motivational quote. But it's not motivational. It's a threat. It's a warning. It's basically saying that even if your strategy is profitable, your mind will still find a way to sabotage you. And complexity gives your mind more weapons. Think about it like this. If I give you a simple system with 3 rules and you break those rules, you can't hide from it. You can't lie to yourself. You can't pretend. It's obvious. There's nowhere to run. You either followed the rules or you didn't. That's scary for the ego. That's uncomfortable. That's accountability. But if I give you a complex system with 20 rules and you break the rules, you'll never even know. You'll convince yourself it was still part of the system. You'll say, it was close enough. You'll say, I made an adjustment. You'll say, the market was different. You'll say, this was one of those special cases. Complexity protects your ego because it blurs responsibility. That's why so many traders fall in love with advanced strategies. It's not because they work better, it's because they make losses feel less personal. They make losses feel like math problems. They make you feel like you're losing for intellectual reasons, not emotional reasons. They make you feel like you can solve it with more learning. So the trader spends months going deeper into analysis, deeper into theory, deeper into complexity, but the actual execution doesn't improve. And when execution doesn't improve, profitability doesn't improve. The trader stays stuck, but now they're stuck with a vocabulary. Now they're stuck with a library of knowledge. Now they're stuck with a sense of identity built around being advanced. And that identity becomes the hardest thing to let go of. Let's talk about how this looks in real life because trading isn't theoretical. Trading is emotional, and the market has a way of humiliating you in the most personal way possible. Imagine a guy named Marcus. Marcus is smart. He's disciplined in life. He has a good job. He's the type who likes doing things right, the type who reads the manual, the type who thinks if he just learns enough, he'll succeed. Marcus discovers trading. He watches a few videos, he learns candlesticks, he learns support and resistance. He finds a simple strategy: wait for price to break a level, retest, enter with a stop below the swing, target the next level. He tries it, he wins a few trades, he starts to believe. He feels that rush. He feels like he found the code. Then he takes a loss, not one loss, a string of losses. Because that's what happens in trading, and suddenly Marcus doesn't feel like a trader anymore. He feels like an idiot. He feels exposed. He feels like the market is laughing at him. He starts questioning the strategy. He starts thinking maybe it's too simple, and so Marcus upgrades. He adds RSI. He adds moving averages. He adds MACD. He adds an ATR filter. He only trades if the trend is aligned on the higher time frame. He only trades if volume is increasing. He only trades if the candle closes above a certain line. He starts looking at correlated pairs. He starts watching the economic calendar. He starts doing the most. And you know what happens? He feels better. Not because he's making more money, but because now he feels like he's doing something advanced. He feels like a pro. He feels like he's leveled up. His chart looks impressive. His strategy sounds impressive. His explanations sound impressive. And that's when he starts posting it. He starts telling his friends. He starts saying things like, I trade ICT concepts, or I use smart money, or I use institutional order flow. He feels special, but the results still aren't there. Because when Marcus is in a trade, none of those advanced tools help him with the real battle. The real battle happens when price goes against him, when the candle wicks his entry and then comes back, when it almost hits stop loss and then reverses, when he's up 20 pips and then it pulls back to break even, when he takes profit too early and watches it run without him, when he holds too long and watches profit evaporate. That's where traders die. Not at the strategy, at the decision-making moments, at the emotional moments, at the temptation moments. And complexity doesn't reduce those moments. Complexity multiplies them. Now, Marcus doesn't just have a trade. He has 1,000 interpretations. He starts thinking RSI is diverging. Maybe I should exit. Then he thinks, but the moving average is still aligned. Maybe I should hold. Then he thinks, but volume is dropping. Maybe the move is weak. Then he thinks, but higher time frame structure is still bullish. Then he thinks, but I see an imbalance. Then he thinks, but this looks like manipulation. Then he thinks, but there's news coming. Then he thinks, but this was a premium zone. Then he thinks, but this is a fair value gap. Then he thinks, but the market makers might. And now he's not trading, he's spiraling. And this is why the more advanced your strategy becomes, the worse you'll trade. Because trading success requires decisive action. It requires simple decisions repeated at scale. It requires clarity. It requires calm. It requires confidence. And complexity destroys clarity, which destroys confidence, which destroys execution. There's a painful irony here. Traders chase complexity because they think it will remove uncertainty. But complexity actually increases uncertainty. It creates more variables. It creates more possibilities. It creates more maybe. And trading cannot be done with maybe. Trading needs, I do this when this happens. That's it. That's the whole game. Let's look at it from another point of view. Picture a woman named Alina. She's not trying to be the smartest trader in the room. She's not trying to win debates on Twitter. She's not trying to impress anyone. She just wants a side income. She's tired of working. She wants freedom. She finds trading and she's overwhelmed like everyone else. She sees the complexity. She sees the jargon. She sees people talking about liquidity sweeps and algorithms and dark pools, and she thinks, maybe I need to learn all of this. She tries. She goes down the rabbit hole. She takes notes. She buys a course. She spends late nights learning. She tries to trade what she learns. It doesn't work. She gets emotional. She loses. She stops. Then she does something different. She finds one simple setup. She says, I'm going to trade one pattern. She focuses on one session. She focuses on one pair. She decides her entry, her stop, her take profit. She keeps it basic. And she starts journaling. Every trade, every emotion, every mistake, every time she broke her rule. What happens is she starts learning herself. She starts realizing her biggest losses aren't from the setup. They're from her behavior. She moves stops. She takes profit early. She revenge trades. She overtrades. She trades when she's tired. She trades when she's angry. She trades to feel something. And by keeping the strategy simple, she can see her behavior clearly. So she improves. Not by adding complexity, by removing mistakes. Over time, her results become consistent. Not explosive, not crazy, not glamorous, but consistent. And consistency is the thing that eventually becomes explosive. Because once you're consistent, you can scale. You can increase size, you can increase frequency, you can compound. But without consistency, size just amplifies your failures. That's why simple strategies beat complex strategies, because they allow consistency, they allow mastery, they allow discipline. If you're watching this and you've ever felt like trading is harder than it should be, share this video with one trader who needs to hear it. Share it because most people don't need more information. They need fewer lies. Now let's talk about the biggest lie in trading, that being advanced equals being profitable. This lie is everywhere. It's built into the culture. It's built into the internet. It's built into the gurus. Because simple doesn't sell. Simple is boring. Simple isn't sexy. Simple doesn't look like value. You can't charge people thousands of dollars to teach them patience and discipline. You can charge them thousands of dollars to teach them a complicated method with proprietary names. So the industry pushes complexity. They make trading look like something only the elite can do. They make you feel like you're missing something. They make you feel like the reason you're losing is because you don't have the secret. They make it seem like if you learn the right advanced concepts, everything will click. But if you zoom out, the world doesn't work like that. In every domain where people reach mastery, simplicity is the end result. The best athletes aren't doing complex moves. They're doing fundamentals at the highest level. The best fighters aren't using fancy techniques. They're using basics with perfect timing. The best musicians aren't playing random notes. They're playing simple patterns with perfect emotion. The best chefs aren't making complicated meals. They're making simple food with perfect execution. Trading is the same. The best traders aren't doing more. They're doing less, better. There's a prop firm trader named Devin. Devin is one of those guys who doesn't talk much. He doesn't post much. He doesn't argue online. He just gets funded, gets payouts, and repeats. People in his circle know he's legit, but he's not famous. A new trader meets Devin and asks him what strategy he uses. The new trader is expecting something advanced, something elite, something complicated. He's expecting Devin to say he uses complex models, smart money concepts, algorithmic signals, and multi-time frame confirmations. Devin pulls up his chart. It's clean. No indicators, no clutter, barely any drawings. The new trader looks confused. He thinks Devin is hiding something. Devin explains the setup. It's simple. He trades a breakout of a key level during a specific session. He waits for confirmation. He enters. He sets stop loss. He sets take profit. He follows rules. He doesn't trade outside his window. He doesn't chase. He doesn't force. The new trader doesn't believe him. The new trader thinks Devin must be leaving out the real secret. So the new trader starts asking questions. Do you use Fibonacci? Devin says no. Do you use RSI divergence? Devin says no. Do you use volume profile? Devin says no. Do you use liquidity sweeps? Devin says sometimes price sweeps, but he doesn't call it that. Do you use smart money? Devin says he uses common sense. And the new trader gets disappointed. He thinks Devin is too basic. Then the new trader watches Devin trade. Devin is calm. Devin waits. Devin doesn't jump in. Devin doesn't flinch. Devin doesn't panic. Devin doesn't add trades. Devin doesn't revenge trade. Devin doesn't move stops. Devin takes the loss when it hits. Devin takes profit when it hits. Devin logs the trade. Devin closes the laptop. That's when the new trader realizes the truth. The secret wasn't the setup. The secret was the behavior. The secret was the discipline. The secret was that Devin could execute simple rules like a robot. Most people can't. And here's the part that hurts the ego. The reason most people can't execute simple rules is because simple rules force you to confront your emotional weakness. Simple rules don't give you enough stimulation. Simple rules don't make you feel like you're doing something important. Simple rules don't feed the ego. Simple rules expose impatience. They expose greed. They expose fear. They expose the addiction to action. Complex strategies are not about profitability. They're about stimulation. They're about entertainment. They're about keeping the mind busy so it doesn't have to sit with discomfort. Because waiting is uncomfortable, sitting is uncomfortable, like doing nothing is uncomfortable. Simplicity is uncomfortable because it feels like you're missing out. So traders overcomplicate, not because it's better, but because it keeps them from feeling bored. It keeps them from feeling uncertain. It keeps them from feeling powerless. If you're getting value from this, subscribe to Traders Mind TV right now because this channel is about building traders who can survive. Not traders who know a lot. Traders who can execute. Traders who can stay consistent. Traders who can build real skill. Most people don't want to trade. They want to be right. They want to feel smart. They want to feel superior. They want to feel like they understand the market at a deeper level than everyone else. That's why they chase complexity. Complexity feels like identity. But the market doesn't reward identity. The market rewards humility. Humility looks like taking the same setup 50 times without changing it. Humility looks like accepting a losing week without rewriting your strategy. Humility looks like studying your execution instead of blaming the market. Humility looks like focusing on what you can control. Humility looks like staying simple. Complexity is what people do when they can't handle humility. Now, I want to talk directly to the trader who's watching this and thinking, okay, but simple strategies can't be enough. The market is too complex. That thought right there is exactly why you'll stay stuck if you don't fix it. Yes, the market is complex, but your strategy does not need to match the market's complexity. It needs to exploit a repeated behavior within it. The ocean is complex too. A fisherman doesn't need to understand the entire ocean. He needs to understand where the fish are. He needs a simple method repeated consistently. And he needs patience. A surgeon doesn't need to do complex movements. He needs precise movements repeated perfectly. A pilot doesn't fly by doing complex inputs. He flies by following simple procedures. High-stakes environments reward simplicity because simplicity reduces error. Trading is high stakes. Mistakes are expensive. Emotions are expensive. Overthinking is expensive. Complexity increases mistakes because it increases the number of decisions you need to make, and every decision is an opportunity for your emotions to hijack the process. The simpler the system, the fewer emotional decision points. The fewer decision points, the more consistent the execution. The more consistent the execution, the more consistent the results. Let me show you how this plays out in a way that'll click instantly. Imagine two traders. One is trading a complex system. He has 10 indicators and 5 confirmations. The other is trading a simple system. He has one pattern, one time, one entry method. The complex trader sits down and starts analyzing. He checks the higher time frame. He checks the lower time frame. He checks the news. He checks the dollar index. He checks correlation. He checks his indicators. He sees some signals aligning and some not aligning. He hesitates. He misses the move. He enters late. He moves a stop loss because he's unsure. He takes profit early because he's scared. He ends the day frustrated. The simple trader sits down and waits. If the pattern appears, he trades. If it doesn't, he doesn't. He doesn't care about being right. He cares about executing. He takes the trade. He takes the outcome. He logs it. He moves on. Over time, the simple trader becomes consistent. The complex trader stays inconsistent. Not because the complex system has no edge, but because the trader can't execute it. This is why 90% of traders should be trading simple strategies. Most traders do not have the emotional maturity, the experience, or the psychological stability to execute complex systems. Complex systems require perfect discipline. Complex systems require deep familiarity. Complex systems require clear thinking under pressure. And most traders are not there yet. So instead of becoming profitable, they become advanced losers. They become knowledgeable losers. They become intelligent losers. And that might sound harsh, but it's true. Trading isn't school. Nobody gives you credit for knowing more. The market only pays for execution. And if this is hitting you in the chest right now, comment "simple wins" under this video. Not for me, for you. Because the act of admitting this truth is the first step to escaping the complexity trap. Now I want to talk about the real reason simple strategies feel too simple. It's because they don't give the ego enough to do. And your ego hates being bored. Your ego hates feeling powerless. Your ego hates the idea that the answer could be simple, because if the answer is simple, then the only barrier left is you. So the ego resists simplicity. It says, no, it can't be that easy. It says, there must be more. It says, I'm missing something. It says, that's too basic. It says, that won't work in today's market. It says, real traders use advanced methods. And that ego is the reason you keep losing. Because the ego doesn't want profits. The ego wants superiority. The ego wants identity. The ego wants to feel like it's special. It wants to feel like it has a secret. But profits come from repetition. Profits come from discipline. Profits come from boring consistency. Profits come from doing the same thing in the same way, even when it's not exciting. That's why most people won't make it. They can't handle boredom. They can't handle waiting. They can't handle simplicity. They need stimulation. They need action. They need complexity. This is the same reason people fail in fitness. The best way to get in shape is simple. Eat properly, lift weights, sleep, repeat. But most people can't do it. They jump from program to program. They chase complicated routines. They try exotic diets. They do everything except the simple, boring work. Trading is the same. Now, I'm going to make this extremely practical because I want you to walk away from this video with a new way of thinking. There's a difference between a simple strategy and a simplistic strategy. A simple strategy is focused. It has clear rules. It's testable. It has defined risk. It can be repeated. It can be executed under pressure. A simplistic strategy is vague. It's buy low, sell high. It's guessing. It's hope. It's randomness. So when I say simple strategies beat complex strategies, I'm not talking about guessing. I'm talking about focused systems with a small number of rules that you can execute with consistency. The goal is not to eliminate intelligence. The goal is to eliminate unnecessary decision-making. The goal is to remove every variable that invites emotion. The goal is to reduce your system to the smallest number of rules needed to capture your edge. Because when you simplify, your mind gets quieter. When your mind gets quieter, your execution improves. When execution improves, consistency improves. When consistency improves, profit becomes inevitable. And once you understand this, trading becomes a different game. You stop chasing the perfect strategy. You stop collecting methods like trophies. You stop trying to become advanced. You start trying to become disciplined. You start trying to become dangerous with one thing. Let me tell you about the first time I realized this. I remember sitting at my desk watching charts like it was my job, because in my head, it was going to be. I had the motivation, I had the dream, I had that hunger where you can taste freedom, and I was convinced I just needed the right system. So I learned everything. I mean, everything. I was watching videos like it was school. I was taking notes like it was college. I was saving screenshots, building folders, organizing strategies. And I felt like I was putting in work. Then I would go live. And it was like all that knowledge evaporated. The market didn't care about my notes. Price didn't care about my explanations. My emotions didn't care about my theory. The moment money was involved, the brain changed. The moment I saw the red number, I stopped thinking. The moment I saw a candle wick, I started panicking. The moment I saw a pullback, I started doubting. And the worst part was I would lose a trade and immediately think, I need a better strategy. So I'd go study again. That cycle almost broke me. Because I started thinking trading was impossible. I started thinking the market was rigged. I started thinking maybe I'm not cut out for it. But then I watched real profitable traders. And what they were doing looked offensively simple. It looked like something I had already learned in month one. But the difference was their behavior. They weren't emotional. They weren't frantic. They weren't trying to do more. They were doing less and doing it perfectly. That's when the whole game changed. And if you've ever been stuck in that cycle, if you've ever felt like you're studying more than you're earning, like the market always has a new lesson for you but never a payout, like you're always on the verge of breakthrough but never actually breaking through, then you need to hear this with full seriousness. The strategy is not the bottleneck. You are. Now, here's where we take it deeper. Complexity doesn't just hurt execution. It destroys your ability to learn. Because learning requires feedback, and feedback requires consistent variables. If you change your strategy every week, you never get clean data. You never know what works. You never know what doesn't. You never know if you're improving. You never know if the strategy is failing or your execution is failing. You never know if the edge exists or if it's just random. That's like trying to bake a cake and changing the ingredients every time it tastes bad. You'll never learn how to bake. You'll never master the recipe. You'll stay confused forever. Simple strategies allow learning because they are stable. They allow you to isolate mistakes. They allow you to refine execution. They allow you to see patterns in your behavior. Complex strategies block learning because they're unstable. They create too many moving parts. They create too many excuses. They create too many variables. They create too much noise. That's why simple strategies beat complex strategies. Because the trader using a simple strategy can actually improve. The trader using a complex strategy stays confused. Now, I want to push this message into your brain so deeply you can't unsee it. The market doesn't pay you for complexity. It pays you for repeatable decision-making. Repeatable decision-making is the true definition of a system. A system isn't a bunch of indicators. A system isn't a long checklist. A system is a set of rules that produces consistent behavior regardless of emotion. And the simpler the rules, the easier it is to maintain consistent behavior. This is why the best firms, the best quant traders, the best prop traders, the best consistent retail traders all end up simplifying. Because once you've been humbled enough, you stop trying to look smart and start trying to be profitable. If you're still chasing complexity, it means you haven't been humbled enough yet. And trust me, the market will humble you. It always does. The market will take your pride and turn it into tuition. And now I'm going to walk you through what to do if you're currently trapped in complexity. Because a lot of traders watching this are not beginners. They're intermediate. They've been trading for months or years. They have knowledge. They have multiple strategies. They have folders of setups. They have indicators. They have scripts. They have templates. They have everything except consistent profit. So here's what happens when someone like that hears, keep it simple. It sounds insulting. It sounds like beginner advice. It sounds like it's not for them. But the truth is, intermediate traders need simplicity more than beginners. Because intermediate traders have enough knowledge to sabotage themselves. Beginners don't know enough to overthink. Intermediate traders know enough to overthink. Intermediate traders know enough to second guess. Intermediate traders know enough to justify a mistake with fancy language. Intermediate traders are the most dangerous category because they have confidence without mastery. So if you're intermediate and you're stuck, simplicity is not a downgrade. It's an upgrade. It's the moment you stop collecting and start mastering. Now I'm going to paint a picture of what your trading should look like if you want results. You pick one market, one pair, one asset, something with clean behavior and good liquidity. You pick one session, one window, not all day, not whenever, one time. You pick one setup, one pattern, one idea, one thing that repeats. You define entry, you define stop loss, you define take profit, you define risk, you define what counts as a valid trade, you remove everything else, then you trade it for 30 days without changing it. Not because it's perfect, but because you need data, you need repetition, you need consistency. During those 30 days, the goal is not profit. The goal is flawless execution. The goal is discipline. Because discipline is the foundation. Once discipline exists, profit comes naturally. Now, I want you to understand something about professional traders. Professionals don't trade to express themselves. They trade to execute a business model. That's the difference. Amateurs trade to feel, professionals trade to repeat. Amateurs trade for excitement. Professionals trade for consistency. Amateurs want to be right. Professionals want to follow rules. Amateurs need to feel smart. Professionals need to make money. Complexity is an amateur trait. Simplicity is a professional trait. And this is not an opinion. This is what reality forces on anyone who survives long enough. Let's talk about why the brain hates simplicity. The brain loves novelty. Novelty releases dopamine. Novelty makes you feel alive. Novelty makes you feel like you're progressing. That's why strategy hopping feels good. It feels like growth. It feels like learning. It feels like you're improving. But it's a trap, because novelty gives you the illusion of progress without the pain of mastery. Mastery is painful. Mastery is boring. Mastery requires repetition. Mastery requires doing the same thing when it's not exciting. So the brain runs from mastery and chases novelty. That's why traders collect strategies. It's not because they're smart. It's because they're addicted. Addicted to novelty, addicted to dopamine, addicted to the feeling of, I found the secret. And the market is the perfect drug dealer because the market will always give you a new pattern to chase. It will always give you a new concept. It will always give you a new strategy. There's infinite information. So if you don't have discipline, you'll drown. Now, we're going to take this to the final level. The reason simple strategies beat complex strategies is because simple strategies force you to face randomness correctly. In trading, randomness exists. Losses happen even on perfect setups. Wins happen on bad setups. That's just reality. Complex strategies try to eliminate randomness. They try to filter everything. They try to avoid losses. They try to create certainty. But certainty doesn't exist. So the complex trader becomes fragile. Every loss feels like the strategy is broken. Every drawdown feels like a failure. Every losing streak feels like the end. The simple trader accepts randomness. The simple trader knows that losses are part of the distribution. The simple trader knows the edge plays out over time. The simple trader knows the job is execution, not prediction. This is why simple traders survive. Because once you accept randomness, you stop overreacting. Once you stop overreacting, you stop changing the strategy. Once you stop changing the strategy, you gain data. Once you gain data, you gain confidence. Once you gain confidence, you execute better. Once you execute better, you become profitable. That is the chain. Complex traders break the chain at the beginning because they refuse to accept randomness. They try to outsmart it. They try to eliminate it, and they end up eliminating themselves. Now, I want to give you a final story, one that seals this message. There was a time when I was convinced my strategy needed to be better. I had been losing, and I thought the solution was to add more filters. I spent hours building a complex model. I felt proud. I felt like I had engineered something elite. Then I went live with it. I hesitated constantly. I missed entries. I took late entries. I moved stops. I took profit early. I broke rules. I got emotional. I ended the day exhausted, confused, and frustrated. Then I stripped everything off the chart. I went back to basics. I took one simple setup. I executed it cleanly. I took the outcome. I repeated it. And for the first time, trading felt calm. It felt controlled. It felt like a business. That's when I realized the truth. Complexity wasn't making me advanced. It was making me unstable. Simplicity wasn't making me basic. It was making me consistent. And consistency is what the market pays. If you want to level up, stop chasing advanced strategies. Start chasing advanced execution. Stop trying to be a smart trader. Start trying to be a disciplined trader. Stop upgrading your strategy. Upgrade your behavior. If this video hit you, if it gave you a new lens that you can't unsee, like the video because it helps push this truth to traders who are tired of losing. Subscribe because this channel is for the trader who wants freedom but is finally ready to become the type of person who deserves it. And share it with someone who keeps overcomplicating their charts, because sometimes the best help you can give a friend is saving them from their own ego. And remember this line forever. The more advanced your strategy becomes, the worse you'll trade. Until you simplify enough to finally execute.